Good morning, good morning, good morning. It's Friday the 14th, thankfully not the 13th. It's the morning blast, myself and Mr. Michael Brown, where Mr. Michael Brown and I will give you an explosive daily market preview. Mr. Brown is joining us very shortly. I think he's here right now. If he unmutes himself.
Hello, is anybody there?
Yes. Hello, happy Friday.
Ryan, are you
Hello.
there?
Yes. Can you hear me? Can anyone else hear me?
Hello?
I can hear you. Can anyone hear me? Put your thumbs up if you can hear me.
Hello?
Yes. Come on, you can work right.
Hello?
They can hear me, we can hear you, but you can't seem to hear anything. Let me WhatsApp him. The old boy is having troubles with his technology. Where is he? Hear you. And everyone can hear me. Right, let's add him back. He's obviously got some technical issue. Invite to co-host again. Right, let's try this again. Invite sent. And the drum roll.
Ryan, good morning.
Good morning. Can you hear me?
Oh, I can now. Yes, apologies. I've got absolutely no idea what was going on there. It was like I was talking into a void.
Oh, it sounds like you're in a cave.
No, I'm not in a cave. No. I'm at my desk.
Oh, okay. Let me get the legals out of the way. Nothing discussed in this cave or spaces session investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, or indeed the affiliates and the host, which, as you know by now, is the amazing Mr. Michael Brown, way, and myself, Mr. Ryan Paisley, way. And he can hear us, and we can hear him. So let's crack on. What's happened, my dear friend?
Indeed, yeah. Let's crack on while we can before the technology lets us down once again. Good morning, everybody. Happy Friday to you all. It was a positive day yesterday in terms of risk appetite, despite the fact that we did indeed finally get this announcement on reciprocal tariffs from President Trump. And actually, Trump probably framed this the best out of everyone, rather strangely, during his Oval Office address last night, effectively saying that whatever they charge us, we will charge them. That is the mantra that the US government are working off at the moment. Now, importantly, when they are coming up with these reciprocal tariffs, they will also be considering other measures that are imposed, such as non-monetary tariffs, including, for example, tests that happen on US cars before they're allowed to be driven on the roads in other countries, and also, importantly, countries that charge VAT. That will be accounted for as if it were a tariff, which quite frankly is utterly ridiculous because you pay VAT whether you're buying a domestically produced good or something that's imported. But nonetheless, that is how the Trump administration are going to look at things. Now, importantly, and I think this is why...
Sorry, just on this though, I'm not 100% sure that that's exactly, it might, okay, yeah, word for word, that's what he said, value added. I'm not entirely sure that's what he means. Why I say this is this will be something that Richard Bernard, who's listening, will be very proud that I've understood and remembered, is that, like, for instance, cigars, when you import them, you pay a tax on the weight of them, right? You pay a tax on the imports. Now, you would also pay VAT as well on stuff as well. But so my theory, and I might be wrong here, is he doesn't mean I'm just going to put tariffs on any country that adds a value-added tax. I think what he's trying to get at is he would put tariffs on, or he would consider tax that's put on the import level as a tariff. Because at the moment that's technically not a tariff; it's just like an import tax, right?
Well,
and I think there's
you
a
may
difference
well be right.
I think there's a difference there, and I think that's what he means. I think he means import taxes rather than blanket tariffs.
Well, if that is indeed the case, can someone tell him to go and rewrite the presidential memorandum that he issued last night, which doesn't say that, but you may well be right.
You see what I mean, though, right? It's like there is there's a difference between import taxes and VAT tax. Value added.
And of course, Trump is never a man to get bogged down in the details. So there is every
Right, this is it.
possibility that you could be on the money with that one. In any case, a few other bits and bobs that are important to note in terms of what Trump was saying last night. Perhaps the most important thing was that this is all going to be handled by the Commerce Secretary, Howard Lutnick, whose Senate confirmation hearing vote is set for the 18th of Feb. But importantly, the plans are that all of the studies and all of the proposals are not going to be finished until the 1st of April. And then the plan can go into place at any period after that, either that day or many weeks afterwards. And I think that's really the focus for market participants because we've seen three times now Trump has put tariffs in place, then there's been some talks, then the tariffs haven't actually happened because those negotiations have come to a promising conclusion and some concessions have been won. And I think really the bet and the thinking among market participants this morning is there's a hell of a long way between now and the beginning of April. That's plenty of time for negotiations to happen. It's plenty of time for more concessions to be won. And it's plenty of time for either these tariffs to actually not be implemented at all or to be watered down in a fairly significant way. Excuse me. And actually, we've already seen some moves towards that because although this hasn't been confirmed by the European Union, President Trump did last night say that the EU have lowered their tariffs from 10% to 2.5%. So it does seem as if that is why we're seeing some of the positivity that's coming through
Yeah.
that came through during the session yesterday, with the S&P 500 up by 1%, the Nasdaq up by 1.5%, both of those closing at the highs. While we've seen Treasuries rallying across the curve with the 10-year yield down by about 10 basis points yesterday, trading back where it was before the CPI print, and also why we've seen such significant downside in the dollar, with the dollar index down about 0.6% yesterday and extending those losses south of the 107 handle this morning as cable trades close to 126, trading to fresh year-to-date highs, and also as the euro mounts a charge towards the 105 figure. So I think, of course, to quote Ryan's favourite phrase at the moment, although the matter of tariffs will continue to hang over markets like a sword of Damocles, the hope
Yeah.
is the hope is very much that because this is not going into place today and it's going into place in 2.5 months, potentially there is a lot of time for this all to be watered down. And basically, it's not the worst case scenario that participants had been worrying about. In terms of other bits and bobs from yesterday, then, we did have a few US economic data releases. Initial jobless claims coming broadly in line with expectations at 213,000 in the week to the 8th of February. Continuing claims much better than expected at 1.85 million in the week to the 1st of Feb, down from a prior 1.89 million. Although, of course, neither of those prints pertains to the survey week for the February non-farm payrolls number. We also yesterday had a hotter than expected PPI figure. Producer prices rising by 3.5% on an annual basis in January, up from the 3.3% pace that we saw in December. Although importantly, note that the components of the PPI release that feed into the PCE inflation metric, forgive the acronyms here, but of course PCE is the metric that the Fed prefer to use. Those components were on balance pretty soft and actually cooler than expected, which is why we didn't see too much by way of market volatility on the back of that PPI number. In terms of other bits and bobs, in M&A news, obviously, we heard earlier in the week that Nissan and Honda, they have ended their merger talks. There are now reports that KKR are looking to invest in Nissan instead, either taking a debt and or an equity stake in the firm. Sticking with M&A here in the UK, the Financial Times reporting yesterday that Santander explores selling their UK business to NatWest towards the back end of last year. Santander have said on numerous occasions that the UK business is not for sale. It appears that it is for sale, and NatWest have said that they will not comment on any speculation. Interest reportedly remains from both parties in that deal, and it's also worth bearing in mind that the FT ran earlier in the week that Santander also last year rejected an offer for the UK bank from Barclays. So it does look like they want to get shot of that, but they are waiting for the right price. Sticking with the UK, Bloomberg were running a story yesterday that military chiefs here in the UK have said to the Treasury that raising defence spending to 2.5% of GDP, which is obviously what the Labour government have said they will do, but they haven't given a time frame for doing so. These defence chiefs have said that raising spending to that level would, and I quote here, merely allow the UK to stand still and at best maintain current capabilities. Of course, this comes as President Trump has called for NATO members to spend 5% of GDP on defence, albeit with the US not actually meeting that level at the moment. And it comes as the Munich Security Conference is getting underway today. And of course, JD Vance will be meeting President Zelensky of Ukraine. In fact, I think he is meeting him in the next few minutes. The other thing, just on defence spending, and we did see defence stocks take a bit of a hit yesterday, is Trump, once he'd finished talking about tariffs, went off on a bit of a tangent and started waffling about all sorts of bits and bobs. He was saying, among other things, that he would like Russia to come back into the G20, into the G8, and he was also saying how he would like the US, China, and Russia to all half their defence spending. So on the one hand, he's saying spend 5% to everyone else. On the other hand, he's saying we should halve it. So not particularly much joined up thinking going on there. And a few other bits and bobs lastly, just in terms of the computer chip sector, although Tom Talks Cars isn't on the call this morning, which is slightly annoying. Firstly, ARM Holdings, according to the FT, ARM Holdings, they have secured Meta as their first customer for a new chip project that they have got underway with. And secondly, the Trump administration, and this is according to Reuters sources, they are seeking to renegotiate awards that have been given out under the CHIPS Act. Of course, this is significant for Intel. They were due to receive about $8 billion under this legislation, and the Trump administration are reportedly looking to revise and renegotiate what's going on there and could potentially be delaying some of the upcoming payments as well. So that's one worth keeping on the radar. And I think that is pretty much it from me for now.
Awesome. Thank you very much for that. So quick shout out to obviously Cam and Zach. Cam for Crypto Blast that will be coming along shortly, and Zach for the awesome overnight news roundup. I've just posted Zach's tweet. Obviously that'll be also going into our Substack shortly. And here's some selected headlines from that for you all now. So start off in the macro space. US Treasury Secretary Bessent said if President Trump's tariffs lead to a rise in US inflation, it'd be one-time slight increase, but caveats, he's not sure it will happen as the currency absorbs a huge amount. Big amounts is absorbed by the foreign producer. Yeah, we'll see how that one plays out.
Actually, on that, while we're talking about inflation, Trump said during this rambling press conference last night, he said that under his policies, particularly in terms of trade, there will be, and I'm quoting here, more jobs, potentially higher prices, and lower interest rates. Who's going to tell him that you can't really have those three things together?
I mean, fair play if it does happen. Good luck. Yeah, quite. US President, US President Trump, speaking of him, is set to sign some more executive orders today at 1 p.m. Eastern time, which for normal time is 6 GMT. That's according to our friends at News Corp, so one to keep an eye on. Chinese, so expect obviously loads of headlines around then. Chinese President Xi plans to chair a symposium to boost private sector sentiment next week that will be attended by the country's business leaders, including Alibaba co-founder Jack Ma. In response to US tariffs, or the latest tariffs at least, EU officials have told the FT that more products could be included in its prepared retaliatory tariffs. Most member states backed to negotiations in a trade ministers meeting on Wednesday, and their quote is, "We have to respond. It's better to negotiate from a position of strength." Yeah, I'm not sure you will ever have a position of strength at the moment, especially when you're France and Germany are kind of, the governments are completely ineffective. But there we go.
And well, I was just saying very quickly on that note, it's gone under the radar a bit, but German elections next weekend.
Yeah, exactly. That's come around. Very interesting to see what happens there. What else we got? Sorry, the EU is cutting back tech regulation to spur investments in artificial intelligence. That's according to the Block's digital chief. It's basically doing what they've just slated the US for, which is cutting regulation to boost growth. But Now they're onto it. French President Macron has described Donald Trump's return to power as an electroshock for the EU and a moment to accelerate and execute, warning that otherwise the project, as in the EU project, is at risk of failure. It has no choice. It is running out of road, is the quote. The UK, the number of UK first-time buyers jumped by almost 20% last year and accounted for a record share of new home mortgages. That's according to research that points to the impact of easing borrowing costs and demand. NatWest says customers are continuing to borrow and even repay. That says the UK economy slows and shows signs of strain as the lender beat earnings estimates for 2024. Gold prices, gold prices on Friday are poised for a 7th consecutive weekly gain. Now, I'll hats off to the gold bugs. I'm normally one to take the piss out of them, but yeah, they seem to be right at the moment. Goldman Sachs, with the gold theme there, says if Russian gas flows through Ukraine return to pre-war levels, Goldman Sachs expects the summer 2025 TTF, which is obviously the Dutch gas hub prices, to be 36 to 56% below their 50 euro megawatt hour base case price. So obviously that's just a big old shaft lower in gas, basically, if Russia keeps pumping or starts to repump at pre-war levels, which that's basic supply and demand, I guess. So, fair play to them. I'm not sure why they've chosen 36 to 56. Just go 35 to 55, lads. You're not getting bonus points for being that 1 hour.
No, they've got to make it look like they've had a
this is
comprehensive
it.
model that brought that together.
Right.
You can never come on for rule number 1 of forecasting. You can never have a round number.
Yeah, I'm surprised they haven't gone down to 2 decimal places, to be honest.
Give it time.
Well, yeah. Stocks of cocoa, chocolate in the London and New York have plunged to all-time lows. So good for those with a sweet tooth. Geopolitical news: Vice President J.D. Vance on Thursday said that the US would hit Moscow with sanctions and potentially military action. This strong language, if Russian President Putin won't agree to a peace deal with Ukraine that guarantees Kyiv's long-term independence. China has accused Australia on Friday of deliberately provoking it with a maritime patrol in the disputed South China Sea this week, saying the latter was spreading false narratives, though Australia maintained its action adhered to international law. Israeli official reportedly said that they hope the release of hostages will occur as planned on Saturday. That's according to Axios. One of their spokespeople said it seems that the crisis has been postponed until next week. In equity space, Apple plans to launch an AI-powered Apple intelligence platform for China by May, relying on Alibaba and Baidu to adapt its features and comply with government regulations. Sticking with Apple and Google restored the TikTok app to their mobile app stores Thursday night, weeks after removing it to comply with US law requiring TikTok's Chinese parent ByteDance to sell it or shut down. So one for the influencers to rejoice in the US there. Airbnb shares advanced after the company swung to a profit in the first quarter and said it plans to invest in new businesses later this year. And fast fashion group Shein plans for a bumper. Their plans for a bumper UK stock market listing are likely to be delayed after Donald Trump's tariffs on low-cost parcels. That's that de minimis issue. Baidu said it would make the next generation AI model, Ernie. We've been likened to Bert and Ernie, myself and you.
Ernie.
Ernie, the fastest AI in the West. That's a very niche joke there. They plan to make that open source from June 30th. So another one for another competitor for OpenAI. But yeah, again, it's a shame that Tom Talks Cars isn't on because we could get his juices running. But anyway, that's it from me. Back to you in the studio.
Well, thank you, Ryan. There was actually one other story that I didn't mention, but I do just want to bring up because it's right up my alley, basically. And this is Jamie Dimon, the chief executive at JP Morgan Chase. There were some comments from him yesterday, which I couldn't agree more with. Now, just for those who are unsure, JP Morgan, of course, they've now told everyone that they need to be back in the office 5 days a week. It's caused a little bit of outrage among their employees who started an online petition to try and get their bosses to change their mind. And Jamie Dimon came out in an all-hands meeting at JP Morgan with a quote for the ages. Excuse my and his language here. He said in reaction to this petition, "Don't waste time on it. I don't care how many people sign that fucking petition, which is absolutely spot on, to be honest.
Fair
Just,
play. Fair play.
get back to work. Do as you're told. If you don't like it, there is a door. In any case, moving on to today, the data calendar is a little bit light actually compared to what we've had over the last few trading days, but there are a few things of interest. At 10 o'clock this morning, we have the second estimate of fourth quarter GDP out of the Eurozone. That is expected to be unrevised, pointing to continued stagnation in the Eurozone economy. And even if it is revised, it's likely to be a rounding error away from that stagnation, exactly as we see on this side of the channel. Moving into the afternoon session at 1:30 this afternoon, we have the January US retail sales figures due. Headline sales seen falling by 0.2% on a month-on-month basis compared to the 0.4% increase that we saw in December, although the all-important control group sales metric, which is the basket of goods that broadly represents those which are accounted for in the GDP release, that is expected to have risen by 0.3%, a modest slowing from the 0.7% rise that we saw in December. That said, looking at the headline estimates at least, I'm reminded of the old adage that one should never bet against the US consumer. Moving into the remainder of the US session, at 2:15 this afternoon, we have the latest industrial production figures. Production seen rising by 0.3% on the month in January. That would be compared to the 0.9% rise that we saw in the month of December. We'll also get manufacturing production and capacity utilization then as well. In terms of other bits and bobs to keep an eye on as we move through the final trading day of the week, we are due to hear from the Fed's Logan and the ECB's Panetta as we move through the remainder of the day. And in terms of earnings, the slate is relatively light actually today, just Moderna of note reporting before the market open. And of course, as you alluded to earlier, Ryan, not only Trump signing executive orders, but also the potential for Trump to say God knows what over the weekend.
Exactly.
So as is the case, well, probably for the next 4 years now, we are watching for the heightened potential of some gapping risk as and when the markets reopen on Sunday night / Monday morning. And that is pretty much it from me for now.
Brilliant. Thank you very much for not just today, but for the entire week, my dear friend, Mr. Michael Brown. Listeners, thank you as always, especially the regular listeners. We do notice you. Also, thank you for your feedback. Obviously, it's Friday, so have a wonderful weekend. If you are trading today, keep it tight and remember to factor in the fuckery. And we will see you on Monday, bright and early. See you later.
We will indeed. Bye-bye.
Bye-bye.